All right, now as far as investing and retirement, just get into some of the basics. So don't let the terminology and having to go to an expert really stop you from starting today. One of the things that definitely is true is very few can time or beat the market. They think they got that hot stock. I'm going to put all my money in this single stock. And what happens? It could crash and then you lose all your money if you're invested in just one thing. So you don't want to put all your eggs in one basket. You want to invest for the long term. You want to invest in good companies that are, there's obviously not going to be all the best, but if you invest in an index of them, that way you can actually build that wealth. So you obviously want to be aware of risky investments, single stocks. Definitely, there's some people that can, but 85% can't beat the market. So definitely, I just like to invest in the index. We'll talk about that. You want to be aware of commissions too, because a lot of times you want to go with this expert and they're steering you towards the direction of something that's going to make them more money. So obviously they don't have that fiduciary responsibility. They're not looking out for what's best for you. And of course, there's fees that they try to hide as well. So you always want to look. Obviously, there's different types of accounts. Long term is usually what I go for. I want that money to grow over time, knowing the power of compounding. Short term, obviously, you do have savings accounts, but they're not going to have as high of a yield of possibilities of what you can get. So for many of you, you probably have a retirement account. If you work for your employer, definitely check that out. See what retirement options that they have. So most would have for America, it's 401k or a 403b if you're like a nonprofit or government. And a lot of times they'll at least match you up to a certain percentage. So make sure you get that at least, because they're giving you free money for putting into your retirement account. So definitely do that. And just remember that the more you can put in now, picture that graph, that curve. I love that curve going up. Invest now, let that grow over time. So it'll go up, it'll go down at times, but on the long term, it's going to keep growing. And of course, diversify. You can diversify the types of funds. So as far as investments, usually we think of the stock market. So now for stock market, you have the United States, US stocks. You also have international. So globally, there's stocks in other countries as well. And then there's also the, as far as the less of a yield, bonds. It's a little bit safer. You won't get as much of a yield there. But when you need to be just playing it safe and you're getting a little older, that's when you might want to move more towards the bonds there. So now, as far as the funds, so I talked about the types. Well, you have usually let's say you have a retirement account at work, you have a managed fund, and then you have just a index fund. So the managed fund is usually you want to look at the fees, and a lot of times they might, lately it's been target funds, like, all right, don't think about it, just tell me when you think you're going to retire, and we'll take care of the rest. We'll adjust your allocation. So how much we're going to put in stocks, how much we're going to put in international bonds, we'll take care of that for you. Don't have to think about it. Well, part of the issue is they usually charge you 1% or more, and that eats thousands of dollars, lots of money over time by doing that. So for me, I go to just the standard index fund. So they have in my retirement account, luckily they do have one index fund for the large cap stocks. So it's the S&P 500. All right, so those are all the top 500 companies. A lot of these US companies also work globally as well. So it's a good match of, these are the best companies out there. So, and that list will get modified over time. Some don't do so well, and then they get replaced with others that may do better. So it's definitely investing in all of the main, broad, different companies, all the big companies you think of, Amazon, Microsoft. So you'll get a little piece of each of those. So that's where I put the majority of that. I do have a little bit in bonds, a little bit in international, but those are actually managed funds that come with a higher fee there. So depending on your age, obviously over time, I actually will look at what the target fund, what the percentage they do there, and I might play with my allocations for future investments there. So, all right. Now, the other thing, you may have an option to either usually have it deferred as far as the taxes go. So putting money in your retirement account, normally it's the traditional tax deferred. You wait to pay the taxes till later on. And the advantage of that, especially over time, is your money can grow more over that time if you're not paying those taxes right away. So it actually lowers your tax bill while you're working, and then later on you can decide how you want to do that. So that's definitely a great advantage there. There is some accounts may have a Roth option for the retirement accounts. I would usually, for myself, I can open up another account and then use that Roth options if I qualify. So we'll talk about that next. All right, now another thing to keep in mind is to set up and make it so it's automatic. That way you're not thinking about it. I'm not the type of person that's going to check every day what's going on. So I make it so it comes right out of my paycheck. I pay myself first. So that money goes out. So that, in my case, it's 20%. Don't have to think about it. And then whatever money is left over, that pays the bills and everything else. So definitely a good strategy to do that. And also remember, if let's say there is panic, prices are dropping like crazy, that's talking on the news, oh man, what are we going to do? Things are not doing well. Well, that means actually it's on sale. So time to buy. So keep your investing over time. Try to put in what you can each month. Make that automatic, and that'll keep growing. It'll go up and down, but over time, that's going to grow to definitely a lot.